Welcome to the Trusted Bridge Capital monthly video series entitled Know What You Own. I'm your host, Eric Jefferson, and for this call, we're going to focus on a recently added position in Japanese equities. We'll talk about what originally led us here, as well touch on the macro environment that was supportive of this decision. Now, before we get started, have a few quick words from our legal team. With that, we can go ahead, dive right in, and want to start first and foremost with a discussion on the attractive fundamentals. Fundamentals in an investment discipline looks at different ratios, different metrics, trying to identify what are going to be the most favorable regions, sectors, and asset classes of the world. This is a strategy that was made famous by Warren Buffett himself. And recently, he came out, indicated Japan is his favorite country to currently invest in. That is largely due in part to the two metrics that you see listed below. The first is the forecasted earnings growth. As we've talked about, earnings is historically the number one driver of stock prices at the end of the day. You boil all of a company's inflows and outflows down. Earnings are what's left over at the end of the day, also known as profit. And as you can see, side-by-side comparison of the Japanese equity market versus the US, Japan currently offers about 1.5 times the earnings growth potential. That is then in contrast to the second point there, which looks at valuation or the price of a stock relative to the earnings that it generates. That is in essence a measure of how expensive a company is. And as you can see, Japan roughly a third the cost versus the US. So as you think at a high level, we interpret these two decisions side by side. Japan currently offering more attractive growth potential in the cost to purchase or benefit that growth, roughly a third less than what domestic markets offer. Now, obviously, any investment decision, not a function of two variables or metrics. When we think about the macro environment, what's made Japan particularly attractive, first and foremost, is they're not faced with the high levels of inflation we're currently battling with here domestically and across the globe. As a result, their central bank doesn't need to take that restrictive action, raising interest rates, which is obviously designed to hamper growth. In this case, Japan's central bank policy allowed or designed to be very supportive of growth. Obviously, that provides a natural tailwind to a company's earnings. Secondly, you've seen a big shift really in philosophy from Japanese companies as of late. Not only similar to companies around the globe are they tasked with operating and growing a business, but you've really started to see a big push with the focus being on the shareholder. That's measured through payout ratios, which is in essence how much of that profit ultimately makes its way back to the investor. That's something that, all else being equal, certainly a very attractive feature to have, something that the US has certainly been known for, given our emphasis on business. You started to see the rest of the world catch up. And then lastly, one potential concern I wanted to address is around the currency. So obviously, if you invest outside of domestic markets, a company generates revenue in their local currency that then gets translated back into dollars. If all of a sudden the dollar appreciates meaningfully, those earnings that have been generated are now reduced. And so the currency, although that can move in either direction, certainly presents an unknown, particularly over the short term. And so with that in mind, how we chose to incorporate this particular position had a currency hedge to it. So for all the talk of whether the dollar will collapse or continue to strengthen like it has as of late, that is a conversation for a different day. With respect to this allocation, no concerns there with respect to any movement between the Japanese currency and the US dollar. So with that, I want to thank you for your time today. As always, happy to answer any questions please direct them to myself. If we don't connect, have a great rest of the week. Take care.